Entrepreneurs in the process of raising capital and preparing business plans frequently ask me to explain the concept of pro forma financial statements. It's a very important concept and is a critical part of any business plan. Pro forma financial statements put your vision for your company into the language private investors understand, dollars and cents. Pro forma in this context is another word for forward-looking. Therefore, pro forma financials state the financial results that your business plan is expected to generate. This includes a complete set of financial statements, which are a balance sheet, income statement, and statement of cash flows, and looks out 3 to 5 years. Generally speaking, the first year, when assumptions are the most clearly defined, financials are expressed on a monthly basis, and the remaining years on a quarterly basis. Making assumptions about your business plan and marketplace is perhaps the most important part of assembling pro forma financials. Investors generally give more credibility to bottoms-up assumptions as opposed to tops-down. An example of tops-down is estimating a market size of, say, $200 million and assuming that your company will get 5% market share for annual sales of $10 million. A more credible bottoms-up approach would be to assume that you will initially hire 5 salespeople who will each realistically call on 2 clients per day, close 30% of sales, and make annual sales on average of $2 million for a total of $10 million in annual revenue. Macroeconomic assumptions are also a very important element in assembling pro forma financial statements. When seeking funding, the entrepreneur must demonstrate a firm grasp of how the larger economic environment will impact their business. For instance, is your business sensitive to changes in energy prices? If so, then what are your assumptions about the coming months and years? Will your business be impacted by changes in the housing market? If so, then what do you think about the near to intermediate term housing market? When analyzing your business plan, investors will realize that your pro forma financial statements are based on assumptions and will discount them accordingly. However, it's important to show potential investors that you have given careful thought and consideration to the real forces that drive your business. The confidence you inspire will go a long way in establishing credibility.